Hello, my name is Russell Myers. Welcome to Issues Unite. Well, this is the third time I'm trying to record this. The first time, the CPU dragged down. Second time, I kind of dragged down. I lost my organization, so gonna try this one more time. If by the way, my allergies are killing me. So if I cough or sneeze or snort or anything during this, it's that I'm allergic to Alabama. No, it's not coronavirus. Don't start with me. All right. So on Monday, the stock market increased by over 1,600 points. Yeah, during a pandemic, during the lowest sales period that we've seen in years, and and oil is trading down at the lowest prices that we have seen in decades. On Monday, OPEC and OPEC Plus were supposed to meet, and then that was put off by Saudi Arabia, and it is expected to happen tomorrow instead. So yeah, so on April 6th, the stock market goes up. And the meeting got put off. All right, so let's start with oil. All right, what is expected to happen at this meeting is that OPEC and OPEC Plus are expected to negotiate a reduction in oil production of 10 million barrels cumulative. Russia has said that they will decrease oil production. However, that is contingent on whether America also agrees to reduce oil production. Keep in mind, America is not a member of OPEC or OPEC Plus. All right. Now, in March, Saudi Arabia increased their production by 12 million barrels a day. Now, if they come to this meeting and agree to decrease their oil production by 6 million barrels a day, that means they're still producing 6 million barrels more than they were in February. All right, so I'm not sure how well this is going to sit with everybody else in that group. Anyway, and the other day, but no matter what, 6 million from Saudi Arabia, 1 million from Russia. That leaves only a 3 million barrel per day reduction for all the other members of OPEC and OPEC Plus. And, that's really not much. Anyway, so Trump had said that we would reduce production. Now, the difference between the U.S. and other countries is that with Saudi Arabia and Russia and most of the members of OPEC and OPEC Plus, that their oil industries are primarily state-owned. If they make a commitment to reduce production, they can meet that commitment. With the United States, Trump can go to the oil companies and ask them to reduce production, but they may refuse. They've got debts to pay. They've got dividends to pay their investors, etc. And I'm not even sure it would be legal for them to decrease production because they could be sued by their stockholders if they even tried. Because, it's literally a law that they have to try and keep increasing their profit by any means possible. Anyway, all of these countries, are all of the major countries at least are subsidizing their oil industries. Let me backtrack a little bit. by the way. Sorry, before I go into that. Now, any production, 10 million barrel per day reduction, that doesn't come anywhere near what the decrease in global demand is, because global demand has decreased by at least 25 million barrels per day. So even if they decrease production by 10 million barrels a day, as a group, that means they're producing 15 million barrels per day over the demand. Now, there has also been some talk about global storage, oil storage, reaching capacity. Now, it's estimated that at current production levels, they would reach that capacity around November. Now, if they reduce production, they might extend that by a few months, but not by much. And once they hit that capacity, there's really no choice but to completely suspend operations at that point. And I mean, that's an abrupt screeching halt to oil production globally. Everybody, United States, Saudi Arabia, Russia, all of them would have to just stop producing oil. Or at least by over 90%. And that, or oil just stops trading internationally, which that would cause an abrupt end to the petrodollar completely, which I'm expecting this to cause the petrodollar to be devalued, possibly completely collapse. Because even I'll cover that all of this in another video. It's a bit more complex. All right, so all right, where was I? Hold on. Yep, I lost my train of thought. Okay. All right, subsidies. All right. Right now, Saudi Arabia and America are heavily subsidizing their oil industry. It's not necessary for Russia to do so because their break-even point for oil is about $20 a barrel. As I'm recording this, Brent crude is trading at $23.24 a barrel. So that's above their break-even point. Saudi Arabia and America, the break-even point is much higher than that. They're already losing money on every barrel they produce, but they're competing for market share. So, with Saudi Arabia, this loss is being taken out of their national economic reserve. With America, what's happening is that it is driving up the national debt tremendously because we're already subsidizing the oil and gas industry by tens or hundreds of billions of dollars a year. I've mentioned before that if we weren't subsidizing the oil and gas industry, the price of gas would be significantly higher. But then we wouldn't be wasting money on paying for the profits of the rich in the process. We wouldn't be taking money away from social programs to fund subsidies for oil companies. Now, so we were already subsidizing the oil and gas industry, and now they're getting handed more subsidies on top of that Plus, they are being given zero interest loans. The oil companies are deep in debt over this, and issuing bonds, which is another form of debt. The only difference is with a loan, you have to start paying on it immediately. And with a bond, it's a longer term, several years down the line, but you're going to have to pay it all in a lump sum. It's still a debt. All right? It's a liability. So what I'm expecting to happen here is that a lot of small producers are going to wind up closing up shop. They're going to be taken out completely. Normally what would happen is that larger producers would snatch them up for pennies on the dollar. But under these circumstances, the larger producers have no liquidity. I mean, they're already in debt and incurring more on a daily basis. They already have to have help from you and me, the taxpayer. So they are not going to be able to buy up assets that are not going to produce anything right now. So once those small suppliers close up shop, they're going to remain closed for a while. And, now even the large producers may have to start shutting down their lesser producing fields. So none of this is very good. And this will impact the petrodollar, but like I said, I'm going to make another video on that. Now, how does this relate to the stock market? Because there's a direct correlation, similarity between them. All right, so the stock market is rising. Why? Why? When sales are down, employment is down, etc. I mean, even consumers that are running up debt on their credit cards, they're spending less and less because they're coming closer to the limit of their credit limit. And yet they're being given, bailout money. They're being given zero interest loans. The Federal Reserve is buying up bonds, which again is a form of debt. It's a liability, which they're going to have to pay out at some point. And to reduce costs, these corporations are laying off or furloughing people in massive numbers to reduce costs, and yet their stock is going up. Why? Because they're taking this money. They have no liquidity. So they're taking this money that's handed to them by all these different means and buying up their own stock to drive up the price of their stock. Why? Well, to benefit the investors and the CEOs who will turn around and quit and then sell off all the stock. When you see an increase in the stock market, it's because they've been given an interest rate reduction. They've been first promised a bailout, and then they receive the bailout, but those increases in the stocks are temporary and short term, and then you see a decline again. Even though the Federal Reserve is continuing to buy out bonds through the ETF market every day now. Every day. So, even when what this will all come down to is that even when the pandemic ends, this is going to make the recovery much slower, much more difficult. Even the people that were working multiple jobs and what have you are going to have less of an opportunity to do that because there's going to be less employment available. A lot of these jobs that are being eliminated are not coming back for years, if at all. Consumers are going to be spending less because the debts that they are running up now are going to be coming due. They're going to have higher credit card payments and higher interest payments, etc., and meanwhile probably have less income when this is over. So, the recovery from this, a lot of people never recovered from the crash of 2008. This is worse, and it's going to take years or decades to recover. So, I don't mean for all of this to be all doom and gloom and to sound horrible. There are actually some good sides to it, but I'm going to cover that in another video later on this week. All right? So don't get all depressed about it. Just understand what's going on. Okay? That's my goal, is to help you understand what's going on. All right, so that's going to be it for today. If you can afford to, please donate $1 a month to help me expand the channel. I'll put my PayPal link below, and I hope you have a good day.